You want to make some profits trading or investing in crypto. In this video, I'm going to show you a simple setup if you are a beginner to get yourself started trading and actually trying to make some profits, including some of the analytics and free resources that I use in order to make sure that I'm positioning myself in the correct way. I'll go through that step by step in this video. Timestamps I'll leave down below as well. First thing, we need a trading system. I use Bybit mostly, and so I'm going to use Bybit here. I'll leave a link to them below. If you are new, you can make a deposit and get a deposit and trading bonus up to $30,000. So that's a good bonus if you are starting out. Link in description for all of the details there. You can see how to make deposits and get the bonus. We're going to go to buy crypto, fiat deposit right here. And this is how you deposit on the platform. So if you click the link below, you can sign up for an account and then you get an account number. You need to do KYC, which is passport or national ID card. Then you can deposit and withdraw fiat currency. So you can see if you've got pounds, you can use faster payments. If you're in euro, you can just use a SEPA bank transfer. There are some options for many other currencies, as you can see here as well. So you'll just have to see what the options are for your fiat. You can deposit that fiat onto the platform. You can go through withdrawals as well. So that's how you get money on and off, and then we can go ahead and trade. There's two ways to make profits with cryptocurrency. The first one is investing over the longer term. The second is to day trade and try and make short-term profits. I'll cover both right now. The first one is if we go to trade and then spot trading, this is where you buy and hold assets. So it's like investing in the assets and you own the crypto. So I'm going to go to trading Bitcoin right here. Now, Bitcoin is like property. You wouldn't buy a property on the Monday and sell it on the Wednesday. A property you're probably going to hold for at least 5 years or so, or even longer. That is where you make the biggest amount of money with Bitcoin. Investing isn't a job. You don't exchange your labor for money. It is about investing in the secular growth of an asset. So when should you invest? Well, because we're investing over longer time frames, we can use much longer time frame metrics to have a look at. What I want to give you right here is the active realized price of Bitcoin over time. Now, how to invest in something, you make regular dollar cost average purchases at regular time intervals, maybe once a week, once a month, it's up to you. But what we can see here is that if you dollar cost averaged Bitcoin and just bought an amount each month or each week or every few days, there are periods where you accumulate, where you dollar cost average, and then there are periods where there is a big amount of growth. Now, the reasons behind that's way too much for this video, but as we can see here, there are times where you can dollar cost average, and then there are times when the price accelerates massively. If you want to make profits, what you do is when the price is sideways or down, accumulate and dollar cost average to get a good average price for your crypto. Then when those huge spikes in the price occur, that is where to take some profits. Now, the amount of profit you make is dependent on how much you invest and not day trading and exchanging your time for money. That's not how investing works. You have to be diligent over years. And then when the spike does come, you can either take profits all at once or dollar cost average out. That's pretty much as simple as it gets with investing. Investing is about patience and letting the asset work for you and not exchanging your time for money. As you can see, there are periods where your dollar cost average price goes not much up or down. And there are periods where the economy is going to push the price of assets up. The reasons for that I can't get into, but when that happens, that is the time to actually get out. Now, it's not $100 a day, but it could be thousands all at once that actually average over a very, very good percentage return over time. So when the price, as you can see here, is lower, so 30 or 40% below the all-time high, it's usually an accumulation zone for BTC. And when the price spikes up 100, 200, 300% in a year, that's when investors may take some profits. That's how investing works. It's not about day trading, but it's about consistent investing when the price is much lower than it previously has during, peaks and all-time highs. When trading actively, we need to hold positions for shorter amounts of time, anywhere from a few hours to maybe a few months at maximum, maybe a few days for the most part. Now, there are many things that you can look at, which I'm sure you've seen before, like chart patterns, support and resistance, and other types of indicators that show how trade flow occurs. Now, I've got many other videos on that, which I'll link in the description. They're all in the Crypto Investor course as well. For this video, if you're a beginner, I'm going to simplify it. When you're trading short term, what you're really doing is trading the trade flow of the market, right? So where is the trend And where is the trade flow of that market? There are periods where you have uptrends, and there are periods where you either have weakness or sideways choppy action. And so we've seen that with the Bitcoin price, where you have these long periods of years of kind of sideways choppy, and then you have these big bull markets. Now, crypto is very cyclical, and so for crypto or Bitcoin, it's the same. What we really want to find out from price action is, where is the continuation of the market? You want to trade a continuation of a trend in some way. And the way that we can do that is just to see where tops and bottoms form in price action. So let me explain that very simply. This is a downtrend very clearly. You can see that because the price is making lower highs and lower lows, right? So where you get these extremes, that's where you want to see your trend playing in. So you have a price here that gets rejected and the price moves down. Then we see this gets to the same level, moves down. This is a recovery, moves down. This is a recovery, moves down. This is a recovery, moves down, right? This is clearly a downtrend. And so when we're in that, we can just trade with the trend and take positions. You can also see via indicators. If you look at simple moving averages, you can click indicators here. This is TradingView, by the way. I'll link TradingView in the description. It's completely for free. You can use all of these indicators, and I've got tutorials on it as well, which I'll link below. Simple moving average. Simple moving averages, you can put these on. When the moving averages are moving down, that's a downtrend. You're looking at a moving average of the price going into a downtrend. All of these recoveries are at lower prices, moving down. So we're in a downtrend here. So we can take advantage of these trends in the price. What we also want to see is potential reversals of these trends. So again, you're just seeing a downtrend, and of course you get these recoveries. But look at where all of the recoveries are. They are weak recoveries that are going lower and lower over time, right? And so what you can do with these trends where you see the price action is just weak and pointing down, go with the trend, find the trend, and then trade a recovery. So the trend is down. We want to wait for a recovery and then trade down with the trend. Trade down with the trend because that trend is downwards. Any recovery we want to see, we can short these and trade with the trend down. Now, when trends change as well, you can see that here. So we have a trend change. We take a few days out. We see, is there a trend change? So we have a recovery, then a move down, but we see a higher low, right? So we have a low here, moving up, a higher low, then another higher low. So maybe this is an uptrend we can trade. So what do we trade? We wait for a pullback, and we see here that this is another higher low. And so this is potentially an uptrend forming here. You can be late to the trend, no problem. You want to trade pullbacks with trends and get the next leg of the trend, the next wave to trade over the short term. So once you've identified a trend, you can go back to your trading system and very easily trade that. A trading example with Ethereum right here, what we want to see is any potential trend that we can identify, an uptrend or a downtrend. Once we've identified that, we need to look for price levels where the price reverses from to make sure that we know the trend is in place. Even though it's a very ugly chart, we can definitely identify that. The first one, this is recent price history. We saw a huge drawdown for Ethereum and a reversal. So this price right here is the reversal price, and it's around 1,000 or a little bit below. We then have a huge recovery, but we have a retest from the bears that bring the price down to this local low, which is actually higher. So you have a test here of around just under 1,000. You have a second test of just over 1,000. The price got rejected to the upside here. So potentially what we're seeing is the price recover a little bit. Now what we want to do is wait for the next test where bears take over and try and force the price lower. The next test we got was this one, right? Because most of this is actually just to the upside. And so maybe you traded this, maybe you didn't. But we want to see another test to the downside, which is this one right here. This one is much higher. So it looks like buyers are having to pay up over time, and sellers aren't able to force the price down lower and lower and lower. So a potential uptrend or recovery in some way. That's when we know the market is positioned in some way, we can try and take advantage of it. It's really the only thing we can do if we're trading short term like this. So what we can do is look to take a position. So what I'm going to do is take this sell off here and the recovery afterwards. Of course, we can't time the absolute peak of a test and a recovery. We have to wait for that to happen. So what I'm going to do here is take a long position around this level on the recovery, hoping to catch the move a little bit higher. So what I'm going to do is take a long position right here around this level, saying that I got in, waited for the bounce, and then took a position. In terms of a stop loss, where should it be? It needs to be somewhere where you think the trade is invalidated. What I would do is go to indicators, type in ATR, average true range, put that on the chart, which is this. Average true range is going to tell me the normal price movement of the asset during the time period that you're looking at. I'm looking at the day chart here. And so during this time, Ethereum can move around $80 to $90 a day naturally. So I have to give the trade some room to breathe, $80 or $90 below. So you're looking at maybe 1,400 or something like that, maybe a little bit more. That would be normal volatility. And maybe you want to give the trade a little bit more or a little bit less. That's up to you. And then you're looking for an impulse to the upside in terms of where you want to take profits. I would be looking at a decent impulse, maybe looking on this example, you're looking at maybe 10, 12, 13% as an impulse. That would be a few weeks holding that position, looking for an impulse to the upside and a stop loss level. Now on the right hand side, I can open my order by value, press confirm, order by value. I'm using 5x leverage, so let's open $1,000 position, and I know that I only have to put $200 down for that and go and buy long as a long position because it's a retest. We get recovery here, and maybe this is another test with another recovery. If we are wrong, then we go stop loss and take profit. So click this when you open the position. We want a stop loss price, as we can see here. I'm just going to click our trade calculator. A stop loss price losing around 8%. So stop loss, I'm going to stop loss trigger around 8%, minus 8% of the position. So if I click that and press confirm when I open my trade, I know that I am going to take a 8% loss if the trade moves against me. So I know that my loss is limited. And in terms of take profits, I can just leave the trade to run and make some decisions later. Day trading is so risky because really what we're doing is trying to identify impulses in the market. They are often wrong and you often make losses, which is why you have to have stop losses. You're going to get many of these trades wrong. Some are going to fly and make profits as well. Impulses in the market is what I've learned over almost 15 years now is really the only thing to trade. If you want some more specific guides about trade entries, how to manage risk, trade patterns and everything like that, free resources down in the description. The Crypto Investor course has 300 videos on trading as well, and you can ask me questions. So check the details via the links below. I'm James, it's MoneyZG. Cheers for watching, and I'll see you in the next one.